Welcome back for another top-notch video. This week, guys, we'll be talking about the week of 22 February through 26 February. As always, the top-notch channel is about the Thrift Savings Plan, or the TSP. We talk about the C, S, I, and F fund if you're in the Thrift Savings Plan. And we talk about the ETFs IVV, VXF, EFA, and AGG if you are in Roth IRA or brokerage accounts. Overall, what these equal, guys, is the S&P 500, small caps, international markets, and bonds. If you guys are more interested in this channel, please like, subscribe, or share. We do kind of a broad overview and then go into a technical analysis every week, and then we kind of show you guys where we are allocated for the week. So let's get right into the video. So the first thing we like to look at is TSP Talk. That is a website. Definitely recommend you check them out. They kind of do a broad overview of the week, the day, the month, and the year. So for this week, guys, markets were down quite significantly in the F fund, the C fund, the S fund, and the I fund. All of our equity funds were down, including bonds were down for this week. So the only place that really was beneficial was cash. We did move to cash this last week in the Top Notch channel, so that was a good move for us overall. But these funds, especially the S fund, down 4% for this week. That's a pretty big drop in numbers. This S fund really was up for the year at the very start, January timeframe, then really came down from that. And we'll show that in our technical analysis. If you guys have questions, we're going to move into the broad overstroke of these markets, kind of show you guys what happened. First thing we like to look at is a VIX up here. That's an additional chart. Tom from TSP Talk does this commentary. Please check it out. As you can see, at the end of January, we had a very big uptick in the volatility index, which is the VIX, which is how much price goes up or down, the percentage of how much we're losing or gaining. Saw that really in the end of January. Now we're seeing that again towards the end of February, moving into March. So that's very interesting. As far as the S&P 500 goes, or the C fund IVV, what did we see here? We were bouncing off the top of this trend line here for a while, and then it finally decided to move down here. Now we're at the bottom of this trend line. Have to wait and see where that goes from here. But if it breaks this trend line, which it could if we'll look at it from our technical analysis, could come all the way down here, the 200-day moving average, which is a long ways down, guys. So just please keep that in mind. Every other time it's come down here, it's bounced off of that, so that's a good sign. We'll have to wait and see where that thing goes from here. The last time we bounced, we were coming out of this, more towards the bottom of it, where it bounced, and now this time we're heading down towards the bottom of that on our PMO line. We'll also check that out on our technical analysis. Not a good sign, though. For basically VXF or the S fund, very interesting, another line. It bounced here, upward movement, bounced here at the end of January, upward movement. Will it bounce here is the question. We'll look at that from our technical analysis, but that could be a little nerve-wracking as we don't even see the 200-day moving average in here for February. And then let's move on to basically bonds. Bonds have not been doing good. As you can see here, we'll show them right here. Look at this, guys. Bonds is way below that 200-day moving average. The 20-day moving average just crossed the 200-day moving average. That is not a good sign. Bonds continue to really just ramp it up and go downward. Not good, not good. So those are all of our weekly charts for the most part, guys. It's kind of what I wanted to show you. Nothing really else other than showing you bonds on this chart. This just shows the 200-day moving average. We do have a gap in here, which is a good thing. Bonds could come back up here just to hit this one last time, but overall, guys, not a really great place to have cash at this time, just with bonds. That is not good. And then look at this chart, guys. Bonds below that 200-day moving average the first time ever since we had that crash back in 2020. Really not looking so good. This looks kind of like a waterfall effect coming down for bonds. Moving on, let's get into our technical analysis. The thing we like to start with is IVV. So this fund here, guys, is the S&P 500 or the C fund. As you can see here, our 50-day moving average here, and we just touched that. Our trend lines on this chart are drawn way apart, guys. Look at this 200-day moving average. This trend line here, there is a lot of white space in here. So if we were to come down, I would just be very cautious with this chart moving forward. On our technical analysis charts, long-term charts for IVV or the C fund, we like to look at just a few indicators. I'll explain it very quickly to you guys. As always, the two indicators we like to look at are the basically the derivative oscillator. Okay, that's these green and red bars. When red bars move into green bars, price tends to go up. I haven't really seen that with this last iteration, but they tend to go up. And when green bars come into red bars, price tends to go down. That's our first indicator we like to look at. And the second indicator we like to look at is the price percentage oscillator. That is that blue line and the red line. The red line is the moving average. The price percentage oscillator is the blue line. When blue crosses red, price tends to go down. When blue crosses red again, go to the upside. When blue is on top of red, price tends to increase. Okay, those are our two indicators. When both are down, that's a red sign to get out. When one is up, one is down, that's a yellow sign. Play with caution. And when both are up, that is a green sign. That is a good thing. So where do we sit for IVV long-term charts? As you can see on this S&P 500 chart here, not good things, guys. Towards the beginning of January, we started to see this kind of warning sign with the derivative oscillator moving down. Price did not react to that. We did have our one indicator above. This was kind of a real big warning sign right towards the end of January, and it's just been on this line here. Very hard to tell, not very distinct with both our indicators, and I would just say I proceed with caution ever since the beginning of the year. Price did increase quite a bit, and we are up. I mean, with the S&P 500, 2% for the year. But with that being said, guys, I just don't know if it's worth it with just these close signs here. This week was the first week we saw the derivative oscillator drop negative. That is very not positive. That is negative red, not good. We also saw the PPO line drop below the moving average, also red, negative. I would stay out of this fund, guys. I know in the Top Notch channel we saw this up week right here. Kind of saw it drop this week, this past week, and we got out of charts, and we've been out of charts this week, guys. Just seeing that cautionary tale, and charts were down this week, so that was a good move. Stay out of IVV on the long-term basis. That is long-term charts. Let's look at it, IVV from a short-term chart or the C fund. What are we seeing here? Also, really negative signs, guys. Ever since the 17th, 18th of the month, our PPO line, that blue line, has crossed the moving average into the red. Look at price up here, has continued downward. We started these Bollinger Bands are really close, and just big moves here. The volatility did pick up. Big moves moving towards the downside, keeping going down. What did our derivative oscillator do? As you can see here, guys, been moving down, moving down, moving down. Price not really reacting to that, but staying the same. Cross right around here, and then sure enough, price decided to start going down as well. Really lost price here. It looked like we make a comeback towards the end of the month. That did not happen. We had a negative fake out on the derivative oscillator, which usually means big price action. Sure enough, big price action followed that towards the downside. This is also a red. Stay out of it for a long-term and short-term basis for IVV or the C fund for this time, guys. Moving on to VXF or the S fund. Also in a lot of trouble, guys. This fund was leading all of our equity funds for a long time. And as you can see here, we've hit this line a few times, like I mentioned. Now we've crossed that line, so that's not good. Now we're looking at this 50-day moving average. But if we bust this 50-day moving average, look at all that white space, guys. That could be a big fall. So please keep that in mind. Please proceed with caution when looking at VXF or the S fund moving forward. As far as charts go, we look at the same indicators, long and short-term charts. Let's look at the long-term charts for VXF. What are we seeing? Same indicators down here. Price up here. As you can see, since the beginning of the year, this has been falling. The derivative oscillator moving down. Price was moving up, not with that. It's very odd to see that. Don't usually see that. But this week was the first week we saw a negative red bar in here. Price reacted up here to that. That's not good. Our PPO line is about to cross here. It hasn't crossed just yet, but it's very close. This is cautionary, and I would just stay out of this based off of what we see with these charts. I could see maybe 1 or 2 ugly weeks for the month of March coming up, or an ugly month of March coming up. So please keep that in mind when we look at VXF. Short-term charts for VXF. What are we seeing? Also in the negative, guys. Look at this. PPO line crossed the moving average on the 16th here and has continued downward. Not a place to have your funds. Looked like we would get out of this a few times. Saw a negative fake out here, negative fake out here. Big price movement on those fake out moves. Continued downward on price. Our derivative oscillator has been negative this whole time. All right. PPO line is negative this whole time. This is a red chart. Do not get into this chart. Not a good place to keep your money for the S fund or VXF. Let's move on to EFA, International Markets, or the I fund. I fund has been moving up and down lately. Just recently crossed this trend line. We're coming at a breakout session here, and it broke out to the negative here. Not a good sign. Also, a lot of white space in here with a lot of other charts. Please keep that in mind moving forward with EFA. Let's look at our charts now with EFA, long-term charts. I fund, International Markets, else. Look at this, guys. A lot of very indecisive markets here. Look at this blue and red line with each other ever since the pretty much since the end of January. Just not a good place to have money. Not really sure where that would go. It ended up breaking to the downside. We saw that for the first time this week. Not good. Our derivative oscillator's in the negative here. PPO line's in the negative. That's a red stoplight. Stay out of that fund for the time being. We'll have to wait and see what happens moving forward. That's long-term charts. Short-term charts for EFA also in the negative, guys. Ever since the 16th, 17th of the month, price has continued to move down. Look at these big movements here, guys. Do not want to be in this market when price is making these big moves like this. Derivative oscillators in the negative. PPO line is in the negative. That is a red light for the short-term basis to stay out of EFA for the short term. If you guys have questions about those funds, please write them in the comments below. Let's move to our last fund, which is bonds. Guys, usually when markets are not doing well, this is the place to have your money. That is not the case this year. This year, we really saw just markets really move. Look at this waterfall effect. Ever since August, this trend has just gone down, down, down. We hit this trend line twice in a downward market. Now we can't even hit that trend line. We are below our 200-day moving average, which is this line here. Our 50 days below that. Our 20-week moving average below that. Our price is way below that. That is awful for bonds. Bonds since the beginning of the year have just really struggled ever since the treasury markets come back. And it's just really, really been bad, guys. I would stay out of AGG for now, for the time being. We don't even have to look at the technical analysis, but I will just for you guys. As always, long-term charts. Let's look at it. Look at this, guys. I've never seen an entry point into AGG. I thought maybe here towards the end of the year we thought maybe we'd have an entry point in here. That was not the case. We got out of bonds the next week, and we are so glad we did that on the Top Notch channel because the price has just continued to decrease. Look at price here, just down, down, down. We're even outside our Bollinger Bands here. A derivative oscillator way in the negative red here. Might see it come back eventually, but now is not the time. And then our PPO line, ever since September, the longest I could see on this chart has been in the negative, below that red moving line. Not a place to have cash in AGG at this time. That is long-term charts. Short-term charts, what are we seeing? We are seeing a little bit of a positive after such a nasty week here. As you can see, our PPO line is getting close to the moving average, but has not crossed yet, so that is still a red signal. And then our derivative oscillator is green, so that is a green signal, so that green and red equal a yellow. So that is, if you're in this fund, proceed with caution for the short-term basis. Long-term basis still does not look good. So basically, where would I say to be if you're not in any of these stock funds or AGG? Pretty much where we have our funds on the Top Notch channel, which is cash, guys. We are 100% in cash, or the G fund if you're a Thrift Savings Plan person. Just not very good markets right now, guys. That tends to happen. We don't really see any entry points on short-term charts within the next 2 to 3 weeks, or long-term charts, which is in the next 1 to 2 months. Charts can always change, so keep that in mind, but right now it's just not that great of a year so far. Like I mentioned, charts are only up 2 to 4% right now for the year, and I'll re-show that to you real quick. As you can see, charts are only up 2 to 5% for the year for our equity funds, so that's just not that great moving forward, and I just don't see an entry point going forward. Our cash allocations for future funds are going to go to the G or the cash as well, and we're just going to wait for this. We're going to ride this little storm out, see where it goes. Again, if you guys like this channel, please like, subscribe, or share. That's another top-notch video. We'll see you guys next time.